Hi, I'm so glad you're here. If you're like me, you're always looking for ways to save money. And one way to do that is to get a loan. But with so many different lenders out there, it can be hard to know which one is right for you. In this video, I'm going to be talking about Mogo and whether or not it's easy to get a loan with them. First, let's talk about what Mogo is. Mogo is a fintech company that offers a variety of financial products, including personal loans, credit cards, and banking accounts. They're a relatively new company, but they've already gained a lot of traction. So, is it easy to get a loan with Mogo? The answer is yes and no. It really depends on your individual circumstances. Here are some of the factors that Mogo will consider when making a decision about your loan application. Your credit score, your income, your employment history, your debt-to-income ratio. If you have a good credit score, a steady income, and a low debt-to-income ratio, you're more likely to be approved for a loan from Mogo. However, if you have a bad credit score, a low income, or a high debt-to-income ratio, you may have a harder time getting approved. Here are some of the pros and cons of getting a loan from Mogo. Pros: fast and easy application process. No credit check required. Competitive interest rates. Flexible repayment terms. No prepayment penalties. Cons: lower loan amounts available. Higher interest rates than traditional lenders. Not available in all states. Overall, I think Mogo is a good option for people who need a small loan quickly and don't have good credit. However, if you're looking for a larger loan or you have good credit, you may want to consider other lenders. I hope this information has been helpful. If you have any questions, please feel free to leave a comment below. And with that, thanks for watching.